We all know that long-term investing is the best way to build wealth, and statistics bear that out. The problem is there are far too many mistakes that we make when trying to attempt long-term investing. So what are those mistakes and how can we avoid them? As someone who is a financial advisor, I've been in this industry for 15 years now, which is crazy to say. How is it that I'm looking at this, and what are some ways that we can stop this? For someone who has been in this field for 15 years, here are the ways I've seen people consistently make mistakes trying to be a long-term investor, why they happen, and how you can kind of curb these mistakes. Let's go ahead and break it down. The first is having rules for your exit. For example, you say, hey, I'm going to be a long-term investor, I'm going to buy a stock. Okay, great. We all know Warren Buffett, who is retiring at the end of this year, if he's not retired already. The thing is, I'm going to buy this for, quote, the long term. What are the rules for long term for you? Now, I have my own rules. We'll talk about that here in a second. But for you, what is long term? You're just going to hold it for forever and ever until you retire? Are you going to hold it until the very end? Are you just going to hold it for a year or more than a year, which is the long-term definition for the IRS? What is that rule? And if you need to sell, what are the rules for doing that? For example, I wouldn't call this a famous example, but famous for me, right? In my own personal life, I was a long-term investor with Chipotle. I held Chipotle for I think it was about almost 2 years, and I was going on holding it for a even longer time. I've been holding O'Reilly's for 5+ years at this point in time, and the thing for me was, Chipotle switched CEOs. That CEO left and went to Starbucks. That was one of my rules of, hey, I need to sell. So if you want to be a long-term investor, you need to decide what are your rules. Warren Buffett, he has a value calculator, if you will, not a true calculator, but he has something that says this is the value of the stock. If it's overpriced or underpriced, this is why I'm going to buy it. And if it's overpriced for some reason, I'm going to get out of it or decide to stop buying, just hold until an opportunity presents itself. You need to decide what those rules are for you. Now, for me, okay, this is just for me, I have a 6-month and 1 year rule. My rule is I hold it for 6 months, I reevaluate. Is this still the best stock for me? Yes or no? And every 6 months, I decide to keep it or decide to get rid of it. And another part of that rule is that stock still beating the stock market as a whole? So for example, O'Reilly's, is it still better than the S&P 500? If it's a stock like Nike, which I do not own because it was no longer better than the S&P 500, and so on and so forth. If for some reason, and this is just my rules, that it's not better, how far off is it? Are we talking we're talking about you being down 30%? Or is it just 5, right? These are the things I ask myself every single December and every single June. And as we get closer to that date, you'll see how I start to evaluate those. If you want to see how I've done it in previous years, you can check out this video right here. But as we go through, that is one of the main things, having rules for how long you're going to hold, when are you going to sell, and why are you buying to begin with. That is the first step to becoming a good, successful long-term investor. This one should be obvious, but it is also having patience. I think having that rule also allows you to have some patience too. But there have been times where it's like, all right, especially when I was first investing, I get in, all right, good, strong, long-term investor rather, and month, 2 months go by, I'm like, all right, I haven't made enough money, it's time to sell. There are a lot of comments, especially on my most popular videos, where people say, hey, I bought it, it's been 3 days, I've only made 3 cents. Okay, you're not supposed to double your money overnight, at least not on a regular basis. Now, if you do, great, I'm happy for you, but that's not a normal experience, and it's usually not something that you can keep up decade after decade. And that is the purpose here. Investing is a long-term game because you're not just going to retire tomorrow. It's not the lottery. So you do have to have some level of patience. Walk into it knowing, hey, this is going to be X amount of years. Now again, the X number is going to be a number that you have to determine for yourself, but have patience. The market ebbs and flows. I like to use 2025 so far as an example. The market has hit all-time highs. The market also been down, right? I talk so much about Liberation Day because when it dropped, that was a panic flag for a lot of people. Say, hey, it's not been this low, it's not dropped this fast since the pandemic, right? And even back then I said that the market had recovered from things that were worse than that, And it did, right? And we're seeing this now with Bitcoin being right around $80,000 when it was just a few months ago at $126,000. Be patient. When I am buying Bitcoin right now, as it is falling, I ain't planning on looking at that thing for several years, right? And that's fine for me, but I have patience. I know what that goal is and everything in between. The next one when it comes to long-term investing is you have to be very, very careful about what you are investing in and when you are investing in it. What I mean by that is there are some things that are very trendy, right? If you are investing for the long term, you need to know that that thing is going to last. It is going to be something that is worth investing in long term, unless you have a rolling evaluation period like I do. And what I mean by this is, and I'm sorry if this feels repetitive, but I like to go back to that 2020 period. GameStop was never going to be a long-term investment you were going to hold on for 5, 6, 7, or 10 years, okay? That wasn't a thing. Now, if you wanted to use it for a quick flip, then fine, right? I didn't necessarily enjoy that either, but you do what you do, right? The other part of it is, let's go back to Peloton, for example. Let's go back to some of those, stay-at-home stocks that were great at that one moment, but that moment continuously passes and people just go for the trends. I would prefer that if you want to be a good long-term investor, you want to go for things that other companies have to build off of. For example, in this AI era, NVIDIA is one of those things. But, because I know that feels real trendy, right? People have been talking about AI for the last few years. But NVIDIA has always been a good foundational piece of technology across the board for years now. I would argue Microsoft is also a part of that because for a good chunk of us, we all need a computer to do something. And Microsoft, whether it's the physical computer or Word or Excel or whatever it is, has been a piece of that. Same thing with Google. We're watching this, most of us are watching this on YouTube. Same thing with Meta. A lot of that foundation of social media, other than TikTok, is Meta, right? That is how you want to look at these things, and those usually last the test of time. It makes it a lot easier for you to say, hey, I'm investing in this because whatever happens after this usually has to be built off the platform of one of those companies. And that's why they are so valuable as well. Take a look at those things. You need to continue to be patient. Look for those foundational pieces that things have to be built off of. And then also look at who are the dominant players in those spaces as well. Tesla is another good example. I'm not saying that's the best stock necessarily, but long term, it has been one of those. They have to, not only are they the largest and biggest player when it comes to electric vehicles, and y'all know how I feel about Elon Musk, separate story, but also their charger infrastructure. If you are trying to build an electric car now, you are likely going to cut some deal with Tesla and use their chargers. They have the infrastructure. That tells you as an investor, hey, I might hold on to this for the long term. That makes it way easier for you to do it instead of, hey, check my watch, what's the hottest stock right now? Let me just buy that and call it a day. That puts you in a tough position because as the year changes and we move into 2026 and then 2027, that context changes. Things are going to be trendy. What works now is not going to work the next year or may not work the next year, so on and so forth. And we consistently see that. But if you get that foundational piece, I mean, think of it like real estate or land, then I'm making more of that, right? That is entrenched, right? If you got a corner lot, it's going to stay on the corner, right? So it's going to have some level of value. The same thing can be said for many stocks, though not all. So if AI is going to be the thing we expect it to be, NVIDIA might be there. But also, NVIDIA has also been good for more than a decade now. So that can be one of those foundational pieces, for example. Same case, whether you agree or not, same case can be made for Tesla. Same case can be made for Alphabet because prior to ChatGPT, which I don't call a search engine, you call it what you want, that has been the foundation of the internet in some ways. I mentioned it earlier. Yes, for YouTube. Yes, for just search. If you're looking for something, you're likely doing it through a Google engine or Google-owned platform. That is what you need to access the internet and to even be here for the most part if it's not social media, which is Meta, which brings us right back to what I mentioned earlier. Those are the pieces that you need to avoid long-term investing mistakes. But if you need to know how to evaluate those stocks, how to know if this stock is good and this one is bad, especially if you're a long-term investor, then this is the video that you want to check out next.